Hi everyone, hope you're all doing well. Today I'm going to give you two little updates into DraftKings. One is to do with a short seller that's just been proven wrong, and one of them is to do with March Madness, which has just gone on this weekend. So hopefully this is useful for you DraftKings shareholders that follow me. Obviously, you probably know I am a DraftKings shareholder. It is currently my biggest position in my portfolio, and I am very bullish on DraftKings, and that's reflected in my position size in my portfolio. And yeah, I like talking about it. It's my biggest position. Recently, the DraftKings views haven't done so well, so we'll see how this one does. But yeah, I thought I'd just talk about this one. For me, obviously, DraftKings means a lot as my biggest position, but for the thing that with DraftKings is that it's actually had such a good 2021. Obviously, we're going into 2022 now, but 2021 was a really good year for DraftKings. A year that, for me, just got so much more bullish on DraftKings. Like at the start of the year, I was like, okay, DraftKings, very good company, it's firing on all cylinders. I'm going to make this a mid-sized position. And the more the year went on, the more that DraftKings absolutely demolished numbers. You know, we went into 2021 expecting them to do somewhere around 750 million, 800 million revenue, and they came out and delivered 1.3 billion in revenue. And while doing that, the path to profitability got even more clearer. You know, we started the year saying that, okay, New Jersey is now profitable. It has a proven business model of how to get to profitability. And then through the year, by the end of the year, we learned that it's not just New Jersey that's profitable. There's actually 5 other states that are profitable. And more than likely, by the end of this year, we're going to have 10 states that are profitable. And going into this year, you know, we're expecting the business to be now potentially putting in 2.1 billion in revenue. Like, the story for DraftKings through the last 12 months has just got better and better, and that's just made me more excited. And as the fundamentals just carry on growing in DraftKings, it's one of those where you look at the share price, and if you look at the share price through 2021, all the share price has done is got it in the other direction. So with the combination of everything inside the company getting better and better, and the share price going down, I'm just maximising that potential and buying up that dip, and that's why I've got so confident in DraftKings, because you're giving me something here where the fundamentals in 2021 have just got way better than what I thought, and the share price has gone from the 52-week highs of $72 all the way down to $80. So I'm just loving this dip at the moment. So yeah, we're going to go through this with DraftKings. Just a little shout out, I'm going to do a full dedicated video to this later in the week talking about this, but I currently have a new partnership. My new partnership is with Simply Wall Street. It's a platform that I've used on my videos for the last 2 years, and this is a platform that I've paid for because I think it's fantastic. The information you get on it with the growth, the valuation, the ownership, the financial health of the company. So yeah, there's a new partnership with them, and obviously I really enjoy using this platform. I've used it previously for a good amount of time before even having a partnership with them. But yeah, I've currently got a link down in the description below that if you join through that link, you get a 14-day free trial to see if you enjoy using Simply Wall Street, and then if you decide you want to sign up and use the platform. So, you know, give it a go, see if you enjoy the platform. Obviously, you've seen me use it, and I'm a big fan of it. So yeah, I'll have a full dedicated video to that later in the week, but just thought I'd shout that one out for you guys. But getting back onto DraftKings stock, so first of all, we're going to talk about March Madness. So you might not know, March Madness is quite a big event for DraftKings. It's basically a basketball tournament in the US, and it happens over a very short period of time, a bit of a knockout tournament, and it's always very popular in the US and also very popular for the sports betting side of it, like DraftKings, because it's basically the big major events, or the first big major event since Super Bowl, and we know that Super Bowl was exceptional, and obviously this has happened this weekend. So the suggestion was once again that this was going to be an absolute amazing weekend for sports betting, as Super Bowl once again beat expectations. Is looking like it's going to be another great weekend for DraftKings with March Madness going on. Now, there isn't too many information out there exactly how well it's gone yet, but the suggestion is that what we was expecting is it's going to be once again another massive increase. Now, we have a tweet from Mike that said New York did 406 million in online sports betting handle from March the 7th to the 13th, in most since Super Bowl week, which was 472 million. So that's great, and that's not including March Madness. Now, all the suggestions are that are coming out at the moment that the March Madness handle is going to exceed a massive amount. At the moment, ESPN are predicting the handle for across the whole of the US is going to reach 3 billion across March Madness weekend. So these are a couple of numbers to keep an eye out for going into Q1, because obviously this will all coming down into Q1. So Q1 is going to be really interesting for the likes of DraftKings, because obviously you're going to have hopefully very good numbers from the Super Bowl, and also it's looking like March Madness is going to be another blowout as well. So it's looking a very exciting quarter coming into Q1 for DraftKings. So going into the current quarter, they are expected to grow around about 33%. So this could be a number, once again, that we see DraftKings come out and absolutely smash. So with a strong March Madness and a strong Super Bowl in here, definitely one to be keeping an eye out going into Q1. And I think New York in particular, as we can see, even without the March Madness numbers, will be the interesting state to watch and see how much that does contribute to DraftKings. So that's the news on March Madness. Definitely looking positive and definitely one to keep an eye out for if you're a DraftKings shareholder. The next one comes down to DraftKings and a short sell attack. So basically Jim Chanos came out around about in 2021 basically saying he has a short position in DraftKings. He did this and coming on to the national TV program, which is CNBC. And on that interview, he actually came out and made very false statements about DraftKings. He made two false statements. And at the time, Jason Robbins actually then followed up, coming on to CNBC to talk about them and saying that it's just totally wrong. So we're going to listen to what Jim Chanos had to say and also what Jason Robbins had to say.
Their marketing spend, which is currently over 100% of revenues, you take it to 10% of revenues, which is their target, and you keep the overhead at today's level, you don't add anything, DraftKings would still be losing $200 million a quarter or $800 million a year. That is completely and totally insane.
That, of course, Jim Chanos, short seller, on why he's short DraftKings right now. Let's get to Contessa Brewer, who joins us now as a special guest. Hi, Contessa.
Hi there, Joe. Yeah, those were fighting words for Jason Robbins, who joins me now, the CEO of DraftKings. Jason, good to see you this morning. Let me just ask you, I know you tweeted out that Jim Chanos has forgotten how to do math. What are your problems with his take on the numbers?
Well, good morning, Contessa and Joe. I mean, he said it himself. It's totally insane. The math makes no sense. Obviously, if we quadrupled profit, gross profit, cut marketing to 10% of revenue, and kept overhead flat, we would not be losing $200 million a quarter. We also are not trading anywhere near 30 times revenue. It's less than half of that. So
those were two of the big claims that he actually made, which was about obviously that they would lose so much money still. Obviously, if you look at the numbers, it's obvious that the marketing spend is for the new states. So that math was totally incorrect. And also, one of the big claims is that he said that DraftKings traded at 30 times sales, which is wrong once again. Now, obviously, this was about a year ago, so even then, it was somewhere, I believe, around a 12 or something like that. So it was massively incorrect. So there was two massive false from Jim Chanos on a national TV program, made two massive false claims about DraftKings on here. And then obviously Jason Robbins came on to squash them. And it doesn't take a genius. You know, when this came out, you could look for yourselves and work these errors out.
I'm not sure what he's doing other than, you know, Jim's a smart guy. I'm sure he knows better. And we all have to get up in the morning and look in the mirror. And some people say anything to make a buck. But we're not really focused on people selling short. We're focused on the people who are believers and trying to go out there. And our goal every day is to build a great company over the long term so that we prove them right and deliver tremendous value to our shareholders. And obviously, it's annoying when people come and make stuff up and, you know, do that at their own service. But, you know, not much you can do about it.
Well, I mean, you did take to Twitter and had some pretty harsh words there. I want to ask you about the marketing spend, though, because this it comes up on your earnings calls. It comes up in investor meetings that it seems like the markets are losing patience for a return here and to see profitability happen. Tell me a little bit about how you're seeing the investment in marketing pay off. Take Arizona, for instance. What have you seen about what happens when you spend big?
Well, Arizona is a great example. I'm glad you brought that up. We reached 100,000 customers in Arizona in 17 days. It was over 100 in New Jersey, over 200 in Indiana, over 300 in Pennsylvania. So that just shows you how quickly that ramps. And that was the only state of those four where we didn't have daily fantasy sports. We had no database until 12 days before we launched sports betting. The reason is because it was working. I mean, we were seeing incredible customer acquisition efficiency. And we manage everything on a horizontal basis. So if it's performing, if our CAC to LTV ratios look great, then we think spending more makes sense. We've been very consistent since the day we went public. We've said 2 to 3 year path to profitability in every state. So far, the only state that has gotten to that length of time has been New Jersey. And we did reach profitability on the lower end of that, closer to 2 than 3 years. We talked about that earlier this year. We're going to have an update on some of the states that are coming up on a little over 2 years early next year, once we have a complete year of data for 2021. But we've been very consistent. We haven't changed our story. And I think part of what makes great companies is, yes, the markets are fickle. They'll, in the short term, decide one day something's great, the next day they don't have patience for it. If you're consistent and you execute a strategy that works, which we believe we're doing, I think that over time that's what delivers value. And the shareholders who are long in the stock, who are patient, they get rewarded for that.
And I think that what was really important about that is, did you see the map as well of how much room there is still for DraftKings to grow? And what was also, I think that was going a little bit off topic here, but Jason Robbins actually came out and said, we are getting the path to profitability. We have New Jersey. And this was posted on the 3rd of December, 2021. And now we're obviously a few months ahead of that now. And it's now like the path to profitability is even more clearer, because now he came out and said, we've got 5 states now. Next year it's going to be 10 states, which is so good to just see that story carry on improving. But going back to Jim Chanos and making these 2 false claims on a national TV program about DraftKings, he actually came on last week to say that he now has a short position in Coinbase. Now, enjoying this interview, which is funny because I can't get access to it. For some reason, they put this on the pro version only of CNBC. He was actually confronted about saying what he said about DraftKings. And he said that in that interview, he went, it was a mistake. And he admitted that he made a mistake on that last interview, saying them wrong errors about DraftKings. Now, it is frustrating. It's good to be proven right and say that he has, admitted that he made false claims on a national TV program to benefit himself in a short position he had, telling lies about a company. But it is frustrating that this sort of thing is allowed to happen. It's frustrating that someone can come on that has a short position, put false information out on a national TV program, and that's absolutely allowed. It is a little bit annoying to see that happen. So it is good to see these short sellers proven wrong, but it's frustrating to see this is allowed. And it's frustrating because when you do look at he has made these false claims, what's happened in the share price. Now, obviously, that won't be just because of him making these false claims on this national TV program, but obviously, it shows you the extent that short sellers will go to get that share price down, which is frustrating. So that has kind of been cleared up and dealt with, but it is frustrating at the same time. But at least we are proven right as shareholders that things are going right for this company. So yeah, I hope you enjoyed the video. Talk about these 2 issues anyway, guys, and I'll catch you in a bit.